The Fed has recently been saying that financial stability risks are moderate. What kind of developments could prompt a change in that assessment to elevated risks? And is there an argument for moving the countercyclical capital buffer even when risks are moderate, rather than waiting until the risks are seen as elevated, which arguably could be too late? Thanks.
So I think one of the most important lessons from the financial crisis is really the importance of the stability of the financial system. And so since the financial crisis, as you're aware, we've had a major focus on building up our monitoring of financial conditions and financial stability issues. We've also put in place many initiatives to strengthen the financial system through higher capital and better regulation, more transparency, central clearing, margins on uncleared derivatives, all kinds of things like that, which are meant to strengthen the financial system. We've done many of those things, and we feel that the financial system's in a much better place. As we look at conditions most recently, and this was at our last meeting, and it was in our minutes for the last meeting, quarterly we have a briefing at the FOMC and also at the board of the staff's views on financial stability, and the staff judged the overall vulnerabilities to be moderate. If you dig into the different aspects of that question, households or balance sheets are in good shape. Employment is high, wages are rising, that sort of thing. The banking system, as I mentioned, is much higher capital, much higher liquidity, is much stronger. If you look at asset prices, it is true that some asset prices are in the upper reach of their historical ranges. And then if you look at non-financial corporates, you get there is the story of leverage there. So it's not that there aren't any vulnerabilities, but we see them as moderate. Now you ask about the countercyclical capital buffer. The countercyclical capital buffer is a tool that we added to our toolkit, I think, finally back in 2016. We said that we would deploy it when vulnerabilities were meaningfully above normal. We revisit that on a regular schedule, and the last time we revisited it was, I think, sometime last year, and concluded that the test was not met. As I mentioned at the last briefing, the assessment was that vulnerabilities were moderate, but it remains a tool for our toolkit that we can deploy, when and as we feel appropriate.
Do you see the chances of needing to deploy it as increasing?
As I said, I think I'm in the camp of seeing vulnerabilities as relatively moderate. I think the financial system, I think another thing that we learned in the crisis is that we need to be alert to the buildup of vulnerabilities as a long expansion continues. I don't see that in troubling amounts at this point, but I think it's appropriate for us to monitor that very carefully.